All right. Hello. Welcome to episode number 72 of Going Live with Good Soil. Matt and I are here in person at the Lemonade Investor Day in New York City in the office space they kindly provided us right after their presentation. But we wanted to get our normal live stream time going, keep it consistent. And it'll be a little bit of an abbreviated version this week, maybe 45 minutes in total. Hopefully the audio is going good from all from the Twitter Spaces and the YouTube Live, but Alec, our engineer, will chat us on the background if there's any issues. How's it going, Matt?
Good. I think it's our first time actually doing this in person together on the same camera. We did Spaces, I think when we were in Miami at the same time together, but we were in separate locations. So
Yeah.
It's kind of interesting to do it in this format.
Yeah, I mean, bear with us. Hopefully we've got the technology down. We're not the best. If we had like Farzad here, it would be down pat. But Matt and I are both kind of newbies to some of this podcasting tech, even though we've been doing it for a long time now. So we were just let's first talk about the macro market. We'll go into Lemonade and Tesla in a second, but first, macro market seems to be up a lot, last few days, which is great for long investors like we are. I mean, the CPI number came out under, better than expected, and the Nasdaq popped like 7.5% that day, and then the next Friday jumped again, and yesterday was a little bit of a consolidation day, I feel like, but today, the PCE came in at 0.2% month over month instead of 0.4% was predicted. So two key numbers released in a few days and the market's kind of rallying. It reminds me of, I think in August, there was the July metrics came out and it had been rallying into it, or maybe it was July, the June metrics came out. I can't remember which month exactly, but there was that rally from better than expected CPI and PCE metrics as well. Do you think this sticks, or do you think it's going to be another fake out like the rally from July and August, Matt?
I mean, it's already down so low. So, it is a rally, but like, Tesla's around, $200. We're like, yay, like above 200 bucks. It's like, okay, but we're still down, 30% in the last month or whatever it is. So, I think it sticks month over month if the kind of continuing figures that we're going to get, show that inflation really is being tamed. Yeah. So what happens in the next couple of weeks, I have no idea. But I think if this, if we are at the kind of turning point right now around this inflation, then I think that really could be, we could look back and say, yeah, that was actual like the bottom in the turning point. But I don't know. I'm hesitant to call it.
I am hesitant to call it. Every time we call it, it's wrong. So maybe because we don't call it, it'll really be the bottom. But the difference between now and the summer is the Fed and the tone of their speak. Brainerd, Daly, all the Fed officers are giving interviews or giving questions, being much more dovish in their tone. I don't remember that being the case in July and August. I remember them kind of holding off, and then Powell, infamously in the end of August, what was that, the meeting in
at the
Wisconsin,
in
Montana, yeah. What town it's called or whatever, but he gave that Jackson Hole gave that speech that was like super hawkish, and it just turned the market around and it just crashed. So I don't think, I don't see that happening this time. It seems like the Fed have all, been signaling that, hey, it's time to start slowing down or considering we slow down. And they're all saying that now. So, I think this time hopefully is different. I know there's people, trying to predict the macro markets that, probably study it, 50 or 100 hours a week, like Peru, well known on Twitter for trying to be a macroeconomic, predictor. And he's convinced that the stock market hasn't hit bottom until the Fed pauses completely, because it's never happened before, he's saying. So, I'm not so sure. Macroeconomics predictions are super difficult, and no one really knows.
He's changed his tune a couple times in the last 6 months, even.
Yeah, so he's changed his mind a couple times. I mean, I give him credit for being able to change his mind, right? Because a lot of people don't.
It's not criticism necessarily, but it's not like, you can just take what he says as gospel, and that's what's going to happen in macro. I think it's just nobody gets macro right consistently.
Yeah, exactly. And then this FTX debacle, I mean, this has been created a lot of uncertainty in the crypto markets, but there seems maybe that spilled over to Tesla to some degree somehow. Do you think so? I mean, do you think there's like investors in FTX that are like, crap, I lost all my money there, I have to now sell my Tesla stock to cover whatever I need to cover or something.
I don't know. Like maybe if Tom Brady was a big Tesla investor, that'd be a problem.
Or Sam Bankman-Fried. He was apparently a huge fan of Elon's, right?
Yeah.
What if he personally in Alameda might have had like a $3 billion Tesla position on or something? Who knows, right?
I don't know. I kind of got the impression they were mostly, the crypto. My sense is there's, first of all, what a ridiculous story.
Yeah, and he had money all over the place with like Democratic zone. I mean, how is the press not covering this the way they should? I don't know.
This was just breaking in our live stream last week when this happened. And I was like, I don't know what you're talking about. Like I was completely wrong on what I said, but the story is just remarkable, and like the gall of Sam Bankman-Fried. Like he went from somebody that was like widely respected both within the industry, but also by a lot of people in Washington and elsewhere. Just it's a a really young billionaire who's going to give all of his money to charity, and had all this all these amazing talking points. Well, it turns out he just committed fraud. So like just totally torched everybody's money. Investors, obviously, but also customers. I mean, it's he. I don't know. It's a remarkable story, and it's
remarkable. I mean, there's going to be Netflix documentary. I think Michael Lewis was embedded with him for the last 6 months. Did you hear about that?
No.
Yeah, Michael Lewis.
Oh my
This is going to be incredible. Michael Lewis.
I can't wait for that book.
I can't wait for that book either. I mean, I've always thought of Michael Lewis as being kind of an honest, author, and telling it like it is. I don't think he can be bought like that New York Times, columnist who wrote that big hit piece on Sam Bankman-Fried yesterday or the day before, So I'm pretty sure Michael Lewis will have a really cool angle to all of this, and I can't wait for that to come out.
Yeah. I don't know that there's much fallout directly on Tesla, to be honest with you. I mean, I think the bigger thing for me is just like continued Elon sales. I don't think there were any Form 4s yesterday either. So hopefully we're done here, but that's caused a huge amount of pressure. And I think, really upset a lot of investors too.
Yeah.
And so it's, to me, like the underperformance comes down to just how much he's sold in the last couple of weeks.
Yeah, absolutely. And we're getting to the point with Tesla, like it's because of the split, it kind of clouds memory, but pre-split, this is like 600, 500 and $60 a share we got down to, $540, something like that. Like we were down to 180. So that's pre-split 540. Yeah. I mean, that's pretty low, like thinking about historically. And, 2 years ago, everyone who's bought Tesla for the first time in the last about 2 years is probably underwater, And so that's hard to accept. I think that's hard to swallow for a lot of these retail investors that are so important to the sentiment of Tesla, especially. Mm-hmm. And so I feel when you see your investment go up, and the retail investment community for Tesla has probably tripled in the last 2 years, maybe more. I don't know. There's probably some way to measure it, right, based on like number of state.com questions or whatever it is, the number of just YouTubers. There's like 10 times as many YouTubers on Tesla. So if that's any indication, there's 10 times as many retail investors, but 90% of them are underwater now on their Tesla investment, right? If that's the case.
And they might have had a paper gain of 50%, and now all of a sudden it's a paper loss of 50%.
Yeah.
And it's
if they bought at 1,200 or 1,000, how many people bought above $1,000 a share?
Yeah.
A lot.
Yeah. But I mean, that's the $1,000 a share. Like we were so close to that just a couple months ago.
Yeah.
We were like 310 in September, I think it was, or 315, somewhere in that neighborhood, which split adjusted is just shy of 1,000. So I don't know. Like part of me thinks that these multiples that we're trading at right now are just so low. I mean, I forget what we are now on the forward, but it's like
in the 30s,
like 30 or something like that. Or it was like down to 20.
And Amazon's like 60 or 50 or I don't know. It's like way higher, and it's not. Yeah.
So I don't know. It's a question for me of can those low multiples be sustained, and if they are, which I hope is not the case, but then Tesla will. The price will kind of be dependent on how they perform in the coming quarters. So
yeah, and we had a good discussion with some local Tesla investors last night who met up with us at a local bar here, and we were chatting. And they were very well informed, and a lot of them were from mainland China even. Yeah, and so we got some good perspective. But that's the risk, right? The Chinese economy and the competition, and how commoditized that compelling EVs have become in China. And so the Chinese Shanghai factory margins could get compressed significantly. The economy there, is it strong enough to even warrant the demand needed to fulfill supply in China, at these current prices? It's a big question mark, right? But I think the consensus was that the rest of the world, Europe and North America in particular, there's no problem with that. That's not the same risk there. Even though there's a recession in Europe and in the US, just the value proposition versus competitive EVs and where the rest of the world is on the EV adoption curve. I think China's like 25% adoption or something already for new cars being EVs. In Europe and the US, it's closer to 10%. So there's a longer runway the rest of the world for sure to catch up to where even China is now. And it's not even close to comparable EV products in the rest of the world outside of China. So, how do you compartmentalize that in the overall risks of Tesla, margin compression and so forth? What did you think about all that discussion, man?
Yeah, I mean, it's something that people have been talking about for a long time now. I mean, there was that rumor of like a 17% price cut or something, which Elon refuted recently.
Yeah, from Reuters or something.
Yeah. Well, and Troy Tesla had been, talking about sources that are indicating that there's price decreases coming. So I mean, I think it's a legitimate concern. Now, obviously, that one rumor was not right, but I think the fierce level of competition in China is nothing to sneeze at. So we try to be middle of the road with all of our analysis, and we're that kind of realistic middle of the road attitude that we've had has led us to be bullish on Tesla. But this is one area that I think does warrant some caution. But in my mind, it just comes down to margins. So like if you have to cut prices, well, then their made in China margins might go from, I don't know, like 35% to 25% or something like that, depending on the severity of the cut. So which is frankly like kind of consistent with what we've been assuming already. So it's just like how granular do you want to be on the level of the cut, and it's possible that we've seen our peak gross margins this year until the point where FSD take rate really increases. So that's something to maybe keep in mind.
Yeah. I mean, that's the bullish thing we all talked about too, is the FSD take rate, right? And sooner or later, it's going to get good enough where the take rate materially improves in the US and then gets expanded to Europe. China is a wild card. We don't know how, if, when it'll be adopted in China with, the government regulations there being a wild card a little bit. Maybe it will be fine there, or maybe they're going to put a halt to it there. I don't know. But in Europe and the US, eventually, the other parts of the world, there will be some amount of adoption of FSD. And in the US, I think we've deduced, Tesla doesn't give it out, but it's like somewhere between 5 and 15%, let's call it 10%. But that we'll be able to deduce in quarters to come at some point, that creeping up from 5 to 15% to 10 to 20% to 15 to 25%. It'll become a common question or thing I think that analysts will be asking. What's the current? How do we predict the take rate? It'll eventually be like 40 or 50%, but it'll be over sequential quarters. And I think when that becomes the hot topic, and Wall Street even starts talking about it, like, oh, what's the adoption of the FSD? Because that's just pure margin, and maybe they'll increase the price again, as it gets better too. So I think that's going to be a huge, windfall for the Tesla stock price at some point towards the end of next year, because it'll take a few quarters for it to show up in the financials. That's my kind of guesstimate. But that's exciting. But when we talk about the Tesla valuation, we don't even include that kind of call option that we see highly probable to materialize, right?
Yeah, I mean, we have like a very conservative base case essentially that's just based on manufacturing essentially, and that's what gives us so much optimism though, is just that our kind of base case assumption with very little upside baked in, almost no upside baked in, other than just kind of continued volume growth, results in really, really drastic earnings growth. I think the numbers that Wall Street is projecting for next year, I'm pretty sure Tesla's going to blow those out of the water, even when you don't give any upside optionality to FSD take rate or those other things. So I'm optimistic. It's just how much pain we have to endure before it becomes obvious to the rest of the market what seems so obvious to us.
Yeah, and a big data point on this FSD data, FSD take rate prediction is in the next couple of weeks, the early adopters getting version 11 and showing their YouTube videos of it. And then I'm in like probably a few weeks behind that. I'll get it eventually, but I'm excited for those data points to see the YouTubers showing what they think about it, and then me personally using it. And then that'll inform my kind of prediction on like where we are on this curve.
Yeah.
Right.
Yeah. Single stack. I mean, that's the version 11. They've been Elon's been talking about single stack for so long. It's like I almost forgot that it was coming, and then it's just like, oh, version 11, single stack. Oh, that's awesome.
Yeah.
So I wonder. I kind of think that they are going to recognize the deferred revenue balance, at least for the U.S. customers this year or this quarter. What do you think? Fourth quarter.
Yeah, it
seems single stack, like the one that they'll say, okay, you know what, it's going out to wide release, presumably. I don't know. Maybe it's wide release.
Yeah. I mean, I think I don't know much about the accounting methodologies, metrics. That's what I have you for, to be like the expert on that stuff. I mean, I know a little bit. I know who to go to, and I know you're an expert, and I also know James Stevenson. He's incredible. He had a great short video on something recently. It was funny. I was telling Matt about, but he in the past has been, I forget what his justification was, but it seemed to be well thought out that Q4 last year, because of Q4, it makes sense to make this accrual or this thing happen. And so it would make sense that if it's going to be a Q4, it would be this Q4, right? I mean, next Q4, I think year would be too late if it's going to be a Q4. So just based on you and him, and I think there's a significant chance it'll be this quarter, this Q4. So yeah, we'll just have to see how wide, if they really get to wide, the full wide release in December, like Elon sort of, I think he semi-promised it. I don't know if he, like hard, it wasn't like a hard promise, but he seemed highly certain, right?
Yeah. So we'll see. I mean, Elon's optimism is kind of hard to reconcile with like how long all these FSD, developments have taken. So I'm really curious to see what single stack looks like, and then what the iteration rate looks like from there.
Yeah. So, I mean, Elon Musk, I'm just checking, refreshing the Twitter, every time I look down, I'm checking, he's tweeting, and sometimes we get these live breaking news things. Like one time he said, I'm buying Twitter on our trees. Wasn't that it? And then FTX went down like live. And so I feel like we have good luck with live crazy news stories, but he's just responding to different people's tweets, like being kind of funny. So
Ligma and Johnson.
Welcome back anytime. Yeah. And he's talking about like the people that are fired, if they're talented, they should get a job somewhere else. It's fine with him, or stuff like that. So he's obviously very, focused on Twitter right now, and that's okay. He's like living at the Twitter headquarters. In my mind, that's okay. I kind of expected that. I think it's Tesla, I think, is going to do just fine without Elon sleeping on the floor there, living at the Austin factory. And I think it's just, he still keeps tabs on everything going there. He's got great management teams in place, and I still think he's focused on keeping FSD beta moving forward on track, and production and supply chain. Anything major, I think he just knows how to delegate better than anyone, right? I mean, there's no way he could do what he's doing, CEO of 3 companies at the same time.
It's ridiculous. 3 major companies.
Yeah. So you have so many people pushing back on Twitter. So many Tesla are so upset about it, because you have to blame. I heard someone on Farzad's channel. I can't remember the guy's name, but I've talked to him. Nice guy. But he gave the litmus test is, okay, would people be upset with Elon doing what he's doing with Twitter? Would Tesla shareholders, would there be as many upset Tesla shareholders with Elon doing what he's doing right now if by happen chance Tesla was trading, at $350 or $400 a share right now instead of $200? I doubt it.
I don't think so. I don't think you'd hear a peep from anyone.
You wouldn't hear a peep. That's right. Yeah. So it's entirely because of the stock's going down. You have to attribute it to something. Oh, it's Elon, what he did. And there's probably some truth to that sentiment, uncertainty, but it might just be a great buying opportunity. And when we look back in 5 years, it'll be a blip on the radar, you know? So if you're a long-term investor, I'm not worried whatsoever. But if you're short-term with options and margin, it's very, stressful for sure.
Yeah, Farzad's in the chat there. He says it was Richard who goes by Borghand on the chat. Yeah, he's a regular on those Friday live streams.
I've listened to a couple of them. Like pop in and out. Yeah,
I can't wait to see the Farzad stash, and he's got a great live stream with Sandy and Jordan Giesecke coming up today. So I can't wait to see that one.
Yeah, I mean, I was thinking, I think, I don't know if you saw my chat, but on the channel, like, Farzad, man, you got to get on the Twitter Spaces to support Elon at the same time as the YouTube. It's not too hard when you have 3 of you guys. And there's the wild card of Elon might just pop into your space. I mean, he wants to make the product better, right? I mean, he's going to pop it. He popped into the FTX chat, and I think if enough of the Tesla content YouTubers start putting their live streams on Twitter Spaces, I think it's probable at some point in the next year, Elon will be popping into some of those at some point, like randomly. That'd be super cool. Like, what if he would just show? I'm looking. Elon? Are you there? I'll put you as speaker. Nope, not there. We have 78 people on our Twitter Spaces. It's tiny.
Yeah, it would blow up. If all of a sudden we have like 800,
if we have 1,000, maybe Elon would
be
be there. Maybe, but we have a few hundred on YouTube Live, which is fine. But
yeah,
eventually Twitter Spaces is going to blow up, I think, and Elon wants that to happen. And yeah, it's exciting.
Yeah. So what do you think of Lemonade Investor Day?
Lemonade Investor, moving on to Lemonade Investor Day. Yeah, very well put together presentation. I had a bunch of notes written down. I mean, the point of the Investor Day is to kind of be a, to really juice up the investors, to be like, to really just like get you passionate about the company and where it's going, and it certainly did its job there. And I think the thing that I want to see, that we touch base is the homeowners insurance loss ratio being so high. Like
it's like 111%, I think, in the latest quarter.
And they broke it out, and I think it's very high. And California is the number one culprit. So they shut down California homeowners insurance recently.
Yeah, which is interesting because you tried to get a quote and they
wouldn't do it.
We're not going to insure you.
Yeah, there's smoke near you. We can't insure you because anywhere there's fire. So the homeowners insurance is, if they can get that under control, and to me that's good news, because they can only get it better from here. Like, that's a horrible loss ratio for any insurance product, and it's been for a year now. It was like 130 something percent, and we saw a trend down over quarter. Now it's 170. I don't know if they've broken it out by product like that before. Someone said they haven't. I don't think they have.
Think they have. No,
I wish we had
interesting.
Paper Bag Investor. I don't know if he showed up, but he was supposed to show up. I think his flight got messed up, but we could have had him here sitting with us, because he does great stuff on this stuff too. But yeah, if they can get that homeowners insurance, loss ratio below, significantly below 100%, that would be a good first step, right? That was the biggest thing I took away. There's lots of important things. What kind of interesting takeaways did you have?
Kind of on the same vein of that is, like, they've got such a huge potential for bundling products. So like they gave the stat, I think it was in the Q2 note, that like customers where they've actually bundled. So I think Illinois is the only state right now where they're offering all of their products. And like the average,
there's 3 states, Tennessee and some other states.
Yeah,
Illinois has been the longest.
It's been the longest. Yeah. So I think that the average premium in Illinois is something like, maybe it's 5x or something like that higher than the average Lemonade customer overall, because a certain percentage of them will bundle, home and auto and, pet. And when you do that, like, you go from what they were saying today, like the lowest end pet product is like $60 of premium a year.
Yeah.
So it's like a great way to get customers in.
Yeah.
But like the average customer in the US, they say, is paying $3,000 per year. So
average of 3,000, and they're at like 300
they're
and
like
something.
343 right now. So like
1/10.
just to get to average is a 10x opportunity in the premium per customer. So
of their existing customer base, without growing customer base.
And so this has been such a huge opportunity. And I was kind of curious, like, why aren't they doing more to like kind of cross sell? And I think they did a good job answering that today, that like they're still not in most places, and like their California homeowner issue that they have is like very legitimate.
Horrible.
So like, you don't want to grow your home insurance business if your loss ratio is like 111%. Like, that's a real loss you don't want. Like, I thought they did a really good job kind of answering like where they are today, and like the kind of steps to really increase that over time. They gave Tim Bixby gave a couple really good like sensitivities analyses of like where they could be in 5 years time if they're growing at different rates, and the loss ratios at different amounts. So I thought that was really interesting. But overall, I kind of came away reinforced that this is like a 10x and then maybe 10x again opportunity.
Yeah. So, and we met a guy in the elevator on the way up who's like, he said, I'm a traditional insurance provider, but now at 1.4 book, it's attractive, and I've invested, and he's coming here because he wants to learn more about it, even though it's so different from what he normally invests in.
Yeah, right. It was interesting. There were a couple kind of traditional either insurance analysts or investors that were here, and it's like talking to them. There's a very big difference between Lemonade and everybody else, and I don't think I appreciated just how different Lemonade is from the rest of the industry until today. Yeah,
it's very different. Did you know, Ben? I saw a stat that Ben Graham, one of the greatest investors of all time, people accept, in the conversation, without his Geico investment, he would have underperformed indices.
Oh, is that right?
Yeah.
Oh, geez.
Yeah.
That's so interesting.
Is this Geico 2.0? I don't know. I feel like something I'm like, wow, Lemonade could possibly be Geico 2.0. Possibly. I'm not saying that, but what if we look back in 20 years and we're like, wow, that Lemonade, that really was Geico 2.0. It's possible. It's in the realm of possibilities. The other thing they talked a lot about real quick is the AI predictive model, the lifetime value, lifetime customer value or whatever. I forget what they call
LTV.
it. Yeah, LTV, long lifetime value. And they're on like version 6 of this, and they did a good job. And I've seen them write about it and talk about it. It hasn't really sold me because AI is overused, and the term AI, what does it really mean these days? Everyone uses that term, and they really dove into it and gave a lot of detail about like how they're using statistics very differently and data, and they're gathering data very differently than traditional insurance. And I'm sort of buying into that. I mean, I'm very skeptical by nature. And originally I was like, yeah, that's not part of my model. Just like FSD adoption rates isn't part of our Tesla model. That wasn't, this AI thing is sort of like a call option within Lemonade for us in a way. And I feel like if it really is meaningfully as important as they think it is, it could be a huge, advantage, but I'm not sure. I'm still not bought it. I'm still trying to learn about it. It just seems like, they got all the data, but they're on version 6 or 7. How do they know version 8 isn't going to like contradict a lot of the stuff version 6 or 7 said? We need to see it play out. I guess
it's fair to say that they haven't delivered yet. I mean, a lot of the charts that they showed today, I was going to ask this question, but somebody else did, were like the decrease in expected loss ratio of each cohort. So it was like a prediction, and they're showing their like back tested models are essentially getting better. And so it's like, okay, well, why isn't that showing up in the data? But then they did a good job kind of like, answering that, like what specifically is going on. And they had a really Daniel had a really good, where he did this like geography map, and you could see like what the lifetime value prediction was over time for homeowners. And it went from like monolithic to like very granular. And I thought that was a pretty compelling.
And they zoomed into like Texas at one point with that graph, and went to Houston, and we're like part of like this neighborhood called Friendsville or something. I was like, that sounded like a Harry Potter name or something. I'm just like reading all these Harry Potter books. But a place called Friendsville, they showed like with their latest version of the AI, when you go from version 6 to version 7, it goes from like profitable to like all unprofitable. And so like, look, our newest version showed that this entire neighborhood was unprofitable the way we priced it. So we were able to make adjustments based on that. But I'm curious, what did it actually disclose? What did it discover? Did it discover that it's like a crime ridden neighborhood, or just that all the house values have gone up, but they didn't? I don't know. I'm just curious. We'll see how it plays out. But if there's truth to this AI machine, data model, that's just, icing on the cake for us in a way that could be tremendous, but we'll see.
Well, I mean, the super exciting part of the opportunity in my mind is like they talked a lot today too about how they're building like this backbone infrastructure that's just designed to scale. So if they do, 10x their in-force premium over the next couple of years, and they can get loss ratio down to like even 75%, which is, kind of like the stated goal, but a lot of their cohorts, they're pricing at like, 60% loss ratio, which is like phenomenal. So, I mean, if you can 10x your revenue and this AI actually works, and like your loss ratios come down, then like the operating leverage that they will create is just like ridiculous.
And then there's a couple other ingredients I don't want to get everyone all, I'm not trying to pump everyone up, but there's a couple of ingredients. It's like Lemonade is like one of the highest shorted. It's got such a high short interest rate, and it's such a small cap. It's illiquid. Imagine if these shorts have to start scrambling to cover their shorts, right? And then, Lemonade is just like such a disruptive business model for the insurance industry in many ways, with using telemetry for the car insurance coming online that no other insurance providers are using with any kind of consistency or any substantial way. And then you have no insurance agents or brokers, so you have all that added margins on the lifetime value of the customer instead of paying, whatever
it's
percentage.
A huge amount. Daniel was saying it's 20% that they get like into perpetuity. That's crazy.
And Lemonade, as an insurtech provider, built everything they've done from the ground up, which I know sounds like wishy-washy, but to me, I feel like I understand that from working at Interactive Brokers for those years in the fintech industry and witnessing what it means to build the infrastructure from the ground up of an electronic trading, fintech thing versus, the other providers, just white labeling solutions on top of legacy, brokerage firms that are dino brokers, basically. So I feel like insurance, same thing. There's dino insurance legacy providers that you have some insurtech people white labeling on top of, but it really limits what they can do. And then you have Lemonade, which is building everything themselves from scratch, which to me is a huge advantage, I think. So that's what I really like about it too.
Yeah.
So maybe we should go to Q&A, I guess. We got
about 10 minutes or so of Q&A?
Yeah, 10 minutes of Q&A before we got to go to the investor lunch here. So maybe Alec will put up some questions here. Question from Melody of 1974 on YouTube. Question, did you guys see Alexandra Mers on Brighter with Herbert? I didn't see that. She said Twitter may or could buy Shift4. I've seen that theory thrown out there. I don't think that's going to happen, to be honest. I couldn't see that happening unless there's some information I missed about, like, text messages with Elon, with Shift4, Jared saying like, yeah, we'll buy you. Unless there's something like that I missed, then I just don't see that happening. I think that's very unlikely, or, very low probability. There's a lot of Tesla investors that are also invested in Shift4. Matt and I did not buy into the Shift4. I mean, we don't really know enough about it, to be honest, but
we took a look and we couldn't understand the bull thesis.
Yeah, it might be a good stock, but
it could be, but
we just haven't studied it hard enough.
Was that it's like the whole payments industry is probably going to be a race to the bottom.
Yeah, like Firm, all these companies are just like, I don't like how much could it be worth, really, right?
The more margin you have, the higher your transaction costs, which kind of limits your adoption. So it's like, to me, that's not a space that I find particularly attractive. So I didn't see this. I've seen this speculation, but I didn't see Alexandra's.
Yeah, we have to see her case for it, I guess.
But like the other thing with Shift4 though is like a lot of their technology is a point of sale. Like they're really integrated well into like the point of sale in the real world. In fact, our hotel that we were staying at has a Shift4 thing. And it's like, I think what Twitter is trying to build for their payment platform, in my mind, it's like a very different thing than what Shift4 is trying to do.
Yeah.
But could be wrong.
Next question from No Name on YouTube Live. How quickly does Lemonade expect to roll out their car insurance product to all 50 states? I mean, they didn't address that particular question, I don't think, today.
No.
Did you recall if they discussed that on the earnings call or anything?
No, I don't think they have. I mean, I think what they were saying is they want to, fix the loss ratio first. Like you don't want, if you've got like 120% loss ratio or whatever it is for
homeowners
right now.
Or is that what it is in Metro Mile? It's really bad.
Something like that. It's very bad. So you don't want to like roll that out too aggressively. I don't think. So I think you want to fix the data first. That's one thing Daniel did touch on though, is like they've got about a year of their data from their kind of internal Lemonade car business, and they're still in the process right now of integrating all of the Metro Mile data into their own systems and pricing things, and so I think it's going to take some time for them to do that work and get comfortable enough that they can actually roll it out. Because I mean, imagine a scenario where they expand really aggressively to all 50 states, and you've got $1,000 or what is it, like $1,200 a year for car insurance, something like that, depending on what you have. And your loss ratio, they just did it wrong, and their loss ratio is like 130% on this massive book of business. I mean, that could create serious financial strain on the company. Because like if you fail on the pet side, it's like, okay, that's not so big of a deal. It's not a huge amount of premium. But if you grow your premium 10x and have a 130% loss ratio, that could be fatal. So I don't think they want to make that mistake. Yeah,
it's a bit of a downer because when the Metro Mile acquisition happened, we thought, okay, maybe in a year and a half, we'll see all the states coming online. But it seems to be a little bit slower than that. And they're just being careful, managing their costs. They don't want to have to be put in a position to raise capital again. They mentioned that today. So they're trying to control all their expenses and such. So, yeah.
All right, let's go on to the next question.
From Farzad, Charlie Munger praised Elon today, quote, pulled off a minor miracle, unquote. Could this be a tone shift for Berkshire Hathaway to start throwing money into Tesla? Well, we saw what happened to Taiwan Semiconductor, right? I mean, crazy. Warren Buffett invested $5 billion and stock takes off, right? So you have all these copycats that want to copy what Warren Buffett does. Then you have the people that want to get out in front of the copycats and start buying up ahead. So it could, if there's some disclosure at some point of Berkshire Hathaway buying Tesla, sure, the stock could really take off.
It's up 12% now.
Oh my gosh. Wow. So that's Taiwan Semiconductor, which is like sort of a mega cap. It's a multi-$100 billion market cap company. So it's not easy to make that thing go up 12%. That's a big market movement for that thing. So anyway, I don't know if they're going to buy into Tesla anytime soon. For me, I feel like, the PE, traditional metrics they look at, they have to see that like, be attractive to them for some time. Right now, the forward P's in the 30s, it seems pretty good for us and growth investors for sure. But, historically, I don't remember what the PE was when they started buying into Apple, but I'm pretty sure it was lower than that. I could be wrong. So we'll see. But just that compliment was nice. Elon, I saw, just, said thanks to Charlie Munger. Charlie Munger's 99 years old. I didn't realize that.
Yeah, he's
still at it. I hope I can be
it.
investing in 56 years still. 56 years to be as old as Charlie Munger for me.
Wow.
That's 60-something years for you. 64 years. Wow. So maybe we'll be investing that long.
My kids are going to be grandparents.
Yeah, he's seen it all. Yeah, he gave some strong words on FTX and cryptocurrencies for sure.
I was just looking at some statistics for BYD though, which they are invested in.
Yeah.
And that's trading at a trailing PE of 53. So
wow.
It's actually, it's not like they've never invested in things with high, PEs. And Tesla, for comparison, right now is at 59 trailing.
Oh wow! So BYD,
it's not like the valuation metrics. It's actually kind of comparable. So
yeah.
I know they traditionally prefer like the industrials and like he also added Occidental Petroleum, I think.
Yeah,
so
it also makes you feel like there's a floor of Tesla. If it gets to like 150-ish or below, like you think the Buffetts and Berkshire Hathaway are going to step in to start buying it up if they're buying BYD at that type of multiple already. So
yeah. Martin Muldoon says they've been dumping BYD. So that's a fair point. So they didn't buy at this multiple. That's for sure.
Yeah. All right, let's do another question here from Martin Muldoon. We didn't see a Form 4 yesterday, so Elon was not selling. Why was Tesla volume so unusually high towards the end of last week? That's a good question.
Yeah, I don't know.
Yeah, I mean,
I wish we had inside information to convey, but
I wish we knew.
Well, there's Daniel popping in on the live stream. Hey, Dan.
Such a nice guy. So nice. We met him and Shai Winiger, the CEOs of LMND. Very nice gentleman. And everyone who works here generally is very
I've been very impressed with people
helpful.
here.
Yeah, but we don't know why the volume was so high. Just sentiment, people panicking on the margins, institutional sellers on the margins panicking, all selling at once with this Twitter quote unquote overhang, uncertainty, all the bad press Elon's been getting. On the other hand, the sentiment like that can't get much worse from where it's been, right? It can only get better from here. So the pendulum of sentiment feels like it's about to start swinging the other way.
Yeah, I do see a couple things in the comments. One was that the CPI came out last week, so that's why the Tesla volume was up. That probably makes sense. I haven't, compared the, overall SPY volume to, Tesla to see if those kind of match, but that definitely makes some sense. And then another question is just when will you guys be interviewing Daniel? We actually already did interview Daniel. That's live, so go check.
About a month ago. All our recorded
channel.
interviews. Yeah. We have these live streams. We also have recorded interviews we put out every couple of weeks. And we interviewed him just like a month or so ago. It was really good. All right, next question here. From No Name again. Elon expects a deep recession. Have you been option trading less? I don't know if we want to talk about our specific option trading and our fund. The personal account for me, certainly I've tiptoed into some options here and there that have not worked out well, but for the most part, my personal trading, I'm holding shares long term. It's just you don't know, how long this recession could go on and what it signals to the equity markets. Are the equity markets going to rebound quickly, or are we going to rebound just like 10 or 20%, kind of just trade sideways for a while until the recession is over? I don't know for sure. I don't know if you want to add anything to that.
Yeah, I mean, he also said that his companies are well positioned, and I don't know, it could be something similar to what we saw with COVID, where the kind of huge disruption that caused, it really accelerated a lot of disruptive technologies and Zoom and working from home. I know that was like a fad trade for a while, but I think the trends are actually here to stay. So I think the same thing could be true in a recession. I think if we do go into a very deep recession, I think ICE cars are going to get, absolutely brutalized on their sales.
Yeah.
But Tesla, I'm sure, would probably have to lower prices. But
no, they probably won't with the Inflation Reduction Act.
That's actually, at least in the U.S.
Yeah, in the U.S. Yeah.
So it's not necessarily a bad thing for Tesla.
Yeah.
It probably improves their competitive positioning a little bit.
Yeah, I mean, how crazy is Tesla's going to have 20% plus margins, even if they have to lower prices in China? As a company overall, they'll still have 20% plus gross, margins, when the rest of the industry is going to be like so negative.
Yeah.
It'll be the shining star, even though it's worse than we're hoping, right?
Yeah.
So let's do one more question, then we got to get to this lunch here. From Henry Abanto on YouTube, do you think Q4 deliveries will be higher or lower than what Troy Teslike predicts? I forget what Troy Teslike's latest prediction is.
He had a sensitivity recently, which I thought was kind of interesting. Did you see that email that he put out?
No, what was it?
It was only for his patrons, so I won't go into too much detail. But essentially, he ran, I think it was 4 or 5 different scenarios of if Tesla cuts prices in China by, I don't know, 5, 10, 15%, what he expects total deliveries would be, and then kind of what the corresponding gross margin would be. So if you haven't subscribed to Troy, like that kind of stuff, I think is really valuable. But
yeah,
I will say he had a very large swing in deliveries, depending on like the price. So that tells me that he's placing a lot of emphasis on
demand weakness in China,
and not supply. So, I'd be, his most recent numbers, I forget exactly where they were, but I'm expecting higher than that, which kind of his sensitivity analysis that he ran supported those higher delivery numbers.
Yeah. I mean, it's going to be the weekly deliveries, I think, was just published for most recently in China, and it's looking very bullish already for that. So the trend, at least. So I saw that this morning. We'll just have to see how this next month and a half, did they, is the delivery wave going to happen at the end of the quarter like usual? Or are they really trying to eradicate that? It made sense the way they described how they want to have exports go throughout the quarter as opposed to just in the beginning of the quarter, so they can actually export more cars logistically versus what they've been able to do historically. So we'll see how that plays out, I guess, this quarter. Yeah. It might be, it could be anywhere from 400 to 470,000. That's like my range for this quarter,
400 is low. 470 is probably high, but
that's the range. That's my 90% confidence interval.
Yeah. So your 90% is, so there's only a 5% chance they do more than 470 in your mind? I'd go a little
5 to 10%,
probably.
Yeah, 5 to 10% chance, maybe like a 3% chance under 400, something like that.
Okay,
7 or 8% above. I don't know. I'm just getting very particular here. 7.5%. I don't know. Sometimes I like when I go to the microwave and I put in the time for how long I want to heat things up. My wife makes fun of me because I never put round numbers like 1 minute. I put like 57 seconds or 42 seconds. I have very specific numbers.
Do you adjust the power? I think that's underutilized.
Yeah, it is.
Depending on what you put in there, you don't want to go full steam.
That's too many variables. I just focus on the one variable of the time, but because I know the power level, how it reacts. But if I knew, that's another variable I got to play with. All right.
Farzad says that's hella weird.
Me and Farzad had a heated argument about bacon on Twitter the other day. I don't know if you saw it.
No, I missed that one.
Yeah. So I'm gonna have I was frying them up, Get it? Frying them up?
Yeah, I got it.
All right.
I'm not happy about it, but I got it.
I sometimes tell my wife I want to be a stand-up comedian. It would be fun to just try, but I'd want to be anonymous, like no one know my name, go to like a room where
do what Paperbag does and just
the
bag over your head.
Try it out just for extreme embarrassment, see how it feels, All right. All right, guys.
We got to end it on that horrible joke. But I'm curious though. I need to go check out that thread. I need to know the highly opinionated stances you guys are each taking.
Yeah. From this weekend. All right. I'll talk to you guys later. All right.